Well, this first quarter growth is very impressive. At 7.8%, it exceeds the RBI expectation of 6.5%. 6.5% growth rate was also the average growth rate of the last 4 quarters. What is even more encouraging is that some of the high weight sectors as far as output is concerned, namely manufacturing and the three important service sectors, which together constitute a weight of 72% in overall gross value added. All of those have picked up and they are showing growth rates, respective growth rates, in the range of 8 to 9% on average. In fact, the service sectors that have even a higher weight have also picked up. Now, most of this growth has been supported by a demand side push from the government. Government's investment expenditure particularly, which grew by close to 30%, and consumption expenditure or revenue expenditure also grew by nearly 20%. Now these are the demand sectors that actually government initiative was able to stimulate the economy. And in addition, actually the private final consumption expenditure, which also grew at 7%, which is quite robust, although it is only marginally less than what happened on average last year. So I would say that this growth is very encouraging. I only see one or two points of concern. First, as far as the contribution of net exports is concerned in the overall GDP, it has contracted, whereas in the last year it was positive. And I also see that it will probably further accentuate given the current challenges to our exports. So there are one or two points of concern, but otherwise it's a very robust growth.
So can we expect similarly strong GDP growth in the next quarter as well?
Well, in the next quarter, I think because of the heavy monsoon and some delays in government projects taking off, also because of the monsoon, there would be some slowing down of government capital expansion. But I think private consumption expenditure would continue.